A new decade for precious metals investing with Monex, featuring Managing Partner of CPM Group and author of the Monex Precious Metals Outlook Report, Jeffrey Christian.
Hello, my name is Sean Brasney, Sales Director for Monex Deposit Company. I am here with Jeffrey Christian, Managing Director of CPM Group, commodity research firm. Thank you very much for being with us today, Jeffrey.
It's always a pleasure.
Well, of course, we want to start off with volatility. It has come roaring back here over the last few months. And when I talk to investors on the phone, I hear a lot about them talking about the stimulus package and the money is being injected into the economy, and somewhat simplifying some of the volatility that we've seen based on that. Was hoping you might have some deeper data on that.
Well, I think the monetary and fiscal stimulus that we've seen, not only from the U.S. government, but from governments around the world, it's definitely contributed to the volatility in gold and silver prices. But there is a lot more there. I think the basic underlying issue is a tremendous amount of political and economic uncertainty. And a subset of that is all of this money that's been pumped into the global economy, much of which is actually sitting in the banks and has not really been utilized as fully as a lot of people would have thought by now. But I think the money supply has definitely helped the volatility, but it's not the prime cause. In addition to that, gold and silver are very small markets compared to stocks and bonds and currencies. So the increased liquidity has a bigger effect on the volatility.
Are we seeing some real supply-demand fundamentals kick in regards to mine supply? I know I saw your report a little while back talking about Latin America and Mexico picking up the slack for Chile and Peru at the time. But are we still seeing some disruptions in mine supply with what's going on with Corona?
We're seeing some disruptions, but fewer. I think the biggest disruptions were really January through March in China and March through April into May maybe in the rest of the world. Latin American countries cut back, as did some African countries. South Africa basically shut down for a while. That has seemingly largely dissipated, and a lot of those mines are now coming back into operation. Some of them at less than full capacity, but you're starting to see increased supply. On the demand side, you do have investment demand as a big fundamental.
And this volatility we've seen, and of course the rapid rise in prices, you do think that's strong investment demand, not so much paper-driven?
It's a combination of it. Part of it is paper-driven, and I think the paper trading, the futures, options and forwards, and the leveraged ETFs as opposed to the ETFs that buy physical metal. I think that those things, you're seeing a lot of generalist investors coming in and out of those markets, and that's probably contributing a lot to the volatility that you're seeing right now. The physical demand for gold and silver coins, bars, large bars, small bars, that probably has far less to do with the volatility that we're seeing in prices.
When it comes to the long-term investors in gold, I talked to many of them, and they like to look at the 10-year note and the yield in that 10-year note. I think last Tuesday we saw the 10-year dip to what they say was a negative 1.1 real rate. There's also talk about real versus nominal. Can you educate our viewers and listeners in regards to that real rate versus nominal rate?
Right. Well, the nominal rate is the headline rate. So treasuries right now, 10-year notes are about 0.67% return interest rate on a 10-year note in nominal terms. But then if you look at that and you say, well, inflation is 1.8%, then you realize that you have a negative 1.1% inflation adjusted or real interest rate. And that's what a lot of people look at, because if you're saying to yourself, okay, first off, 10-year T-note, do I want to tie my money up for 10 years in a Treasury note? Well, 0.67% is not that great of a rate for 10 years. But then when you say, wait a second, with inflation, it's actually negative 1.1%, I'm losing more than a percentage a year in the value of that asset if I put it into Treasuries. So that's a really big deal. People simply say, no, I'm not going to do that. It reduces the opportunity cost of having your wealth in gold and silver.
Thank you for that, Jeffrey. And of course, you're the author of our new decade for precious metals investing, as well as your firm has put together our CPM group reports on gold, silver, platinum, and palladium with some great commodity research. Call Monex today. Talk to an account representative and ask them for the new decade of precious metals investing report, as well as the CPM groups on gold, silver, platinum, and palladium.